Now, there are a lot of investment guides for beginners out there, but they're all based on Wall Street lies. Investing has become an entertainment industry and it's destroying your wealth. By the end of this video, you'll be able to see through two of the biggest lies Wall Street tells investors. You'll be able to protect yourself when they set that trap. I'm also going to reveal the #1 rule for investing, the only thing you need to remember as a beginner investor. In fact, even as an equity analyst of 10 years, this is the first thing I tell new investors to do. Beyond stock picking or following experts, this is the most important idea that will make you money. We're talking investing for beginners today on Let's Talk Money.
Beat debt. Make money. Make your money work for you.
Creating the financial future you deserve.
Let's talk money.
Joseph Hogue with the Let's Talk Money channel here on YouTube. I want to send a special shout out to everyone in the community. Thank you for taking a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Now, why does the average investor earn just 4.6% a year on their stocks and bonds? That's not just during the bad years, but a long-term average according to research firm Dalbar. Here's that research measuring the decade through 2013, and the average investor earned just 4.6%, even as the stock market produced almost 8% annual returns. Even a 50-50 stocks and bonds portfolio should have produced a 6 or 7% return during that period. It's because investing has become an entertainment industry. It's still about making money, just not about making you money. You know, all that advice, the analysis, all the commentary that you see on TV and on the internet, it's there for just one purpose: to keep you entertained, scared, and coming back for more. It's to keep you coming back so the TV channels can sell advertising dollars and so Wall Street can cash in on your trading. The investment industry, the advisors, brokers, the money managers, and the analysts, it used to be about helping you make money, but somehow we lost sight of that. I know because I was part of that investment machine. I've worked as an equity analyst for brokerage firms and venture capital. My job was making the numbers look good so you got excited to invest. The average stockbroker makes well over $200,000 a year, including their year-end bonus. Now, that money isn't made on a strategy of buying a stock and holding it for decades. Somewhere, Wall Street realized that if it wanted to make as much money as possible, it'd have to become more like Las Vegas. It would have to turn investors into gamblers, so they made lots of trades. Now, the average investor makes over 88 stock trades a year, according to Fidelity. That's 88 times the commission of just $5 each, even on the cheapest online platforms. The average household invests just $1,700 a year in stocks. So how in the hell can anyone make money when a third of that money, that's $440 on those 88 trades, goes to commissions? So what I want to do with this video is look at the two biggest Wall Street lies, two of the myths that they tell you about investing. Then I'm going to reveal the truth about investing, the only thing that matters and the only thing that's going to make you money. In fact, before we get to that first Wall Street lie, the first two ways that Wall Street tricks you out of your money, I want to ask a question, get your feedback from the community. What's your biggest investing mistake? What's the investment that you made or the bad investing behavior that has lost more money for you? I want to see the problems that you've run into, and maybe we can do a video on that in the future. This first investing lie is probably the biggest, in that investing is about picking stocks and those huge returns. You see, if you're all wrapped up in picking stocks and trying to make those double-digit returns, Wall Street knows that you're going to be glued to the TV for advice and then go straight to your computer to buy and sell on a daily basis. Now, I know that's the exciting part of investing, and we do our fair share of stock picking here on the channel. Real investing, though, is not about picking stocks. That what you invest in is actually far less important than the how you invest. The surprising part is that you really don't even need those huge returns to meet your goals. Just $5,000 a year invested at 7% annually is going to grow to almost $350,000 in 25 years. Even less than half that, just $200 a month, is going to grow to $165,000 for your goals. Now, that's on less than the long-term average return in the stock market and involves no stock picking, no worrying about crashes. That doesn't mean you can't pick stocks, of course. I have individual stocks in my own portfolio and have used dividend stocks to beat the market this year in our 2019 Dividend Stock Challenge. But what we'll see when we look at that one investing truth is that stock picking isn't the important thing. It's not what's really going to matter when making you money. Our second Wall Street lie is that you just need to listen to all the professionals. Let me tell you, as an equity analyst myself, I can say without a doubt that the so-called professionals know little more than anyone else. They don't know where the economy is going, and they certainly don't know where stocks are going. You see this in those big market predictions, and you see it in individual stock forecasts as well. Think about some of these market predictions from some of the best and brightest in economics and investing. And Nobel Prize winning economist Paul Krugman said in 1988 that the internet would have no impact on investing. It's even worse with individual stock predictions. Jim Cramer, answering a call from a viewer in March 2008, screamed that shares of Bear Stearns were solid and selling would be, quote, just plain silly. The bank went bankrupt and started one of the worst market crashes ever in a matter of days. Even worse are the estimates on share prices you see from an army of analysts out there. Investors rely on this analysis for buying and selling stocks, but let's look at the estimates for shares of a generic drug maker, Teva Pharmaceuticals, by Credit Suisse. So here's a 3-year price and rating history for Teva by the analyst, with the light blue line is the price and the black line the analyst's target price. So this analyst, someone getting paid hundreds of thousands a year and on whom investors are depending on, had a price target of $60 a share for Teva in 2016. By 2017, the stock price had fallen to $30 a share, losing half of investors' money. Now the analysts thought the shares were only worth $40 each, but actually upgraded their recommendation. The stock price was now supposed to outperform the rest of the market to bounce back up higher. Instead, the shares plunged throughout the year to less than $20 a share. All the while this is happening, the analyst is cutting his fair value for the stock, eventually saying it's worth no more than $8 a share. So investors counting on this analyst, that the analyst knew how much the shares were going to be worth, saw this fair value drop from $60 to just $8 in 2 years. This isn't an isolated story, but it's not something that you see when these analysts appear on TV. And brokerage firms are actually required by law to show you their history and estimates for a stock, but it's always buried at the bottom like this one was for Teva. Take a look sometimes and you'll see that analysts are almost always chasing a stock higher, increasing this fair value estimate as the stock increases, or worse yet, following it down and decreasing their estimates only after a stock has plummeted and wiped out investors' money. Now, I have to say, I still have a lot of respect for Jim Cramer and his old hedge fund days. He's a lot smarter than I am. But the fact is that you have to take control of your own investing decisions. You cannot count on Wall Street analysts or pundits on TV to pick your stocks or your investing strategy. When it comes down to it, they're going to be just fine sipping pina coladas on their private island. You're going to be the one losing your money. So if investing isn't about stock picking or following these Wall Street analysts, what is it about? How can the beginning investor, how can you make sure that you reach your investing goals? Well, do you know what your goals are? That's the secret here. That's what investing is really about, and it's the only way you'll ever be able to customize an investing plan right for you, by actually understanding your goals and using them as a roadmap for when you're investing. Now, the most important thing to remember with investing is that it's not about the stocks you pick or about your returns. It's all about your goals. So how much do you need to meet your goals and how do you get there? Now I'm going to show you a trick to understanding your goals that's not only going to motivate you to keep investing, it's also going to help pick the right investments for those goals. What I'm going to show you is a way to visualize your goals, to make them real. We're not talking about goals like I want to retire early or I want a $1 million portfolio by the age 65. These kinds of vague goals don't mean anything. They aren't going to help you invest, and they sure as hell aren't going to help motivate you to invest. Making your goals be your motivation means making those goals real. We're talking breaking down every part of your goal, visualizing it, making it so real that you can physically experience it. Now, when you make your goals real like this, that's going to be 100 times more powerful than just saying, yeah, I want to retire early or I want $1 million. Besides the motivation you need to stick to your investing strategy, this visualization is going to help show you exactly how much you need to reach that goal. No more guessing about how much you need to invest. You can use your goal to find the exact number that you need and what you need to get there. So what I want you to do, I want you to think on one of your 2 major life goals. These can be things like retirement or paying for your kids' education or whatever. And now for each one of these goals, you're going to imagine a story around it. Close your eyes and start building that picture. If it's retirement, where are you? What's the weather like? And what time of year is it? What are you doing at that exact moment? What do you do every day that really makes you happy? Another example, if your goal is your children's education, what university are they attending? So imagine them sitting in class. What class is it? What's their major? Now imagine them graduating and having the world just open up to them because they were able to go to that school. Now, after the video, you're going to write out your story for each one of these goals. Be as specific as possible, down to the weather, down to how you and the people around you feel. Spend a little time on this. Really think through it and create that story for your goal. Now, there are 2 things that we're going to do with this mental picture that you've created. First is just to keep it close. Think back on that perfect story at least once every week. Not only is that constant visualization going to help you focus your mind on that goal, It's also going to constantly motivate you to keep saving and keep investing. Now, most investors don't realize it, but regular saving is way more important to reaching your investment goals than those high returns. Saving every month and investing that money over 30 years, the money you put in is going to be more than half of your total wealth over that period. You just cannot reach that financial goal without that habit of saving. So that mental picture of your goals is going to be so important when saving gets tough or when your budget gets tight and you're tempted just to put off investing for the month. It's also going to be important though in showing you exactly the return you need to meet your goals. In our next video, I'm going to show you exactly how to turn this mental picture into a retirement number and how to find the return you need to get there. Using that exact return that you need, we're going to look at the right mix of stocks and bonds to get you there with the least amount of risk and stress. That's going to help you avoid all those bad investing behaviors that lead to that average investor return we saw earlier, because your portfolio is going to grow steadily and you're not going to freak out when the next stock market crash hits. I'll be putting that video on matching your goals with the return you need to get there on the right here. Join the Let's Talk Money community by clicking the subscribe button and the bell notification so you don't miss an episode.